morning, everyone. Today is February 16th video in a row. So I'm going to go through my dividend stock portfolio today, and we're just going to take a brief look at my account balance, what I'm holding, and what my plans are with this account. So this account, I'm using Questrade for it, and all these stocks I'm holding, I don't plan on ever selling until 20-30 years down the road, but I don't plan on selling it. It's a long hold, so everything here is in Canadian dollars because I'm in Canada here and holding US stocks or the dividend payouts, I get taxed for it. So this is just pure Canadian dollar stocks. So let's start. This is BCE, Bell Canada, and Bell Canada is just like an internet provider, and I'm going to show you. Basically, they do the phones, internet, and they can pretty much charge, increase their fees every year. And we're going to take a look at their stocks, and the dividend yield is 5.5%, which is huge. And I plan to hold it forever. Just a brief look. CNR, Canadian National Rails. That's also somewhat of a dividend stock. It's just 1.71, and over the past year it fluctuates and started with $100, $110, so we get capital gain on top of this 1.71. So the stocks in this portfolio is not just for dividends, it's for growth, a little bit of growth as well, but there's a balance of both. csh.un, that's Chartwell Group, and they pay out about 4%. Over last year, it started at $15. Right now it's $15. So last year, it didn't get much capital gains, but I got 4% yield, which is I'm fine with. Another one, Equitable Group. This one is, they just lend out money for like bad loans and stuff like that. Dividend yield 1.67 over last year, $65. $67, so about 1% gain in capital, and dividend yield 1.67, so 2.67% in total. I'm fine with that. Fortis US, fts.to, that's natural gas company and utility. So over last year it tanked a little bit and then it's gone up. Oh, actually it tanked around here, but last year it's gone up quite a bit. $42 to $46, 10% gain on top of the 4% dividend yield. Awesome. Royal Bank, these are like the top 50 most reliable banks in the world. And over last year, it tanked a little bit and it came back up. Beginning of the year, 100. So right now, about 101 and 100.5% capital gain, and dividend yield is 4.68%. Is huge. T.to, that's also a telecommunications company in Canada, is huge. And they pay out 4.63% over last year, but I believe it's gone sideways actually. So I don't really care, and it's paying out 4.63. Awesome. td.to, that's similar to the Royal Bank, top 50 in the world. Past year, $73, now $75, 1% gain in capital, and dividend yield of 3.56, so 4.56. VFV. So the last two here are index funds. So it's tracing the S&P 500s. So last year it started at 61, now 65, about 4% gain. and dividend yield of 1.47 because they hold a lot of bank stocks and REITs, like real estate investment trusts. Awesome. And this is very similar, another Vanguard one that I hold as for long term. Over last year, 48, now 51, about 3%, and dividend yield 1.41. Perfect. So this whole portfolio, there's a little bit of cash here because there was dividend payouts, and I haven't like reinvested the extras of it. I'll show you because there's something I do in this account. It's called dividend reinvesting. So right here, we're going to look at a couple cases here. Chartwell Retirement Residences, they paid out on February 15th, just like yesterday. They paid out $91. I think they pay out per quarter, and they reused the Questrade helped me reinvest that dividend income into 6 more shares at $14.87 per share. So they use $89. So there's $2 left in my bank account, in my investing account. And similarly, TD paid out in January 31st. They paid me approximately, let's see this, $438, and they bought 5 shares at $73. And then so right here I have another about $70 in my cash account. So all of these stocks is paying out dividends quarterly, and it is helping me reinvesting. They take whatever they give us in the account, and then they invest as much as possible back into the stocks. So the portfolio can compound itself. If you guys do have like any plans of doing this, like DRIP, dividend reinvestment plan authorization, so it's just a form that you have to fill in to your brokerage. So for me, it's Questrade here, but for you, maybe, I don't know, TD or Interactive Brokers, wherever you are, Scotia. And so I actually don't read too much of it, but I know the gist of it. So you sign your name, date, sign or print your name, sign here, account number, and say which ones you want to do the DRIP plan. So sometimes you just click all, and then you don't have to write them all one by one. So I did them for every single of these stocks that I hold, so they just roll on their own. Another plan that I have here for this account right now is at 256,000 and change, is that I plan to use these options, the daily option videos that I make, and I plan to reinvest the premiums I collect for the month and just buy more of these stocks. So far, by February 15th or yesterday, I collected $671 here. And also for the stocks portion, we made a play, a 1 week play that gained us $4,400, so about $5,000. And at the end of the month, hopefully the amount would be more than this, at $5,000. I would invest all of this, but in Canadian dollars, to my dividend portfolio, as I want to grow this into $1 million account. So that's the goal. So whatever I make from dividend harvesting and speculation plays, I plan to dump it back to this account, but in Canadian dollars, like the equivalent to it in Canadian dollars, because Right now, the US to Canadian dollar rates is about 1.32 as it says here. And I do have to pay taxes on my gains. So I'm just going to invest the $5,000 in Canadian dollars. Even though I made about 5,000 in US, I have to account for taxes. So that's it for my account summary. And I plan to do these videos maybe once a month just to check on the balance and see what other stocks I want to invest in. So remember to like, subscribe, comment, and share. I love making these videos, and I'll see you tomorrow.